Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this last trading day of June, June 30th, 2021 at 5:35 p.m. Central Time. Now, there's a slew of jobs data and PMIs coming out tomorrow. In fact, I rarely do this, but let me just show you. This is what my traders at 8:40, or rather 5:40 in the morning will see. They'll see all this. This is how I write it so that they can see what reports are coming out, what the estimates are, where the market sits. So you've got Challenger Group, jobless claims coming out, Market Group PMI, ISM PMI, construction spending, and then for the energies, you got what kind of injection in the natural gas did the market do. So you put that all together, it's a slew of information. But I mention this because I get so many people that write me, Ira, what you do in the morning sets me right off where I have to be. I know what's coming out, the times. You're giving me an estimate of it. If I turn around, it's there. You're telling me buy, sell, or stay away in front of that report, or it's okay to go into those reports. That's what I do. And then in the spiders, by 8:40, I already know what most of the reports did. Now we're covering if there's more of them coming out, or if that's it, where you at and how the reaction set in. So, where's the elephant on all this? Well, tomorrow's certainly one of them, but the big baby, that is Friday. You know the jobs data. You also know that on Friday, people are going to be leaving town, getting ready for their vacations. July 4th, you only have a half day of trading Monday morning, electronic. Most things will be over by noon. Some markets, such as the grains, won't even be open, so you got to be careful with what you're doing. Speaking of reports, I wrote to my traders. I said, you cannot go through this grain report because you can get any reaction that can be crazy. Well, you ended limit bid in the front 3 months of corn of 40 cents a bushel. That's a lot, by the way. Almost $1 high in soybeans, higher. So you can play those things the way you want. I have 50 years of experience, and I know how to move to the left and to the right before a report comes out. It means don't go through it if it's considered a big report. Acreage report in June is big. Jobs data, Friday, big. The market's looking for reasons to either place bets, what the Fed is doing, or they're going to be disappointed. It'll be muted only to the degree that it's over the July 4th holiday. When we look at a weekly area chart of closes of the S&P, you're up a 0.5 percentage point. I feel like you've worked so much harder than that, but that's what you're up for the week so far, a new all-time high. You see it here, but I want you to look at the size of the ranges here and notice how they're narrowing in. Volatility's coming out of the market. The advanced decline numbers are starting to falter a little bit. Doesn't scare me yet, but I look at all that. Where are we in terms of the swing line? It's bullish with today's action. Higher high, higher low. The market's been over the 18-day average of closes, which has been over the 100, which has been over the 200. It's a classic bull market. You know, I pointed out to you that these breaks that we had back in May under the 18-day average didn't last long. As this one took place, if you don't believe me, go look at the videos. They're still there on the YouTube. I said, be careful. This market has a tendency to snap back and make a new high after that, just the way it did on these. Bingo. Where's the resistance? The upper Bollinger Band. We're trading in a broad sideways market in the sense it looks sideways, but it keeps carving out higher highs, and the market keeps running up to the upper Bollinger Band. For the first day in about 4 days, today you didn't hit that upper band. But I don't expect that it has to every day, and there's an awful lot of economic data coming out. Are we embedded? You most certainly are. So normally I'd be saying to you, I think the pros are going to be buying the breaks, holding on. Why am I not saying it that way today? Not that the enhanced Bollinger Band course with this isn't at work. It is. There's a caveat going through those major reports. That's my caveat. So, you know where I'm at. NASDAQ keeps hitting the market up there. Embedded reading, bullish. I still say the traders will buy the breaks until you get the jobs data. It either keeps it going or it breaks the back of the market temporarily. You could also get a great number and the market's up so high, it pulls back on you. Got to be careful. Then we get to the Dow. Higher highs, higher lows, right now into a lot of resistance up here in an overbought market. Certainly an uptrend, up for the week 0.18%. So it's fought hard this week, but it's not up very much. The Russell, still up for the week, 0.26. You've got what in the chart? Well, you have a higher high there, a lower low. You're caught in that sideways action, overbought. So two of these indices don't have that embedded reading, two do. Then we're going to come over to the VIX because I feel really good about the VIX and it should load right now. We were down here, and I can't get that to back up, I'm sorry. When it hit the lower Bollinger Band, I said to my subscribers back here and here, both of them, I said, when we've hit, there's a history of when you hit these lower bands, the market likes to rally from there back to the 18-day average, and it's not missed on the pro that is writing puts, taking in the premium. That's exactly. You might say, could you buy futures? You could, but I think it's easier to write the put at times, and you decide which one you want, how much delta you want in it, and you play it accordingly. Nothing works all the time. I've never found anything that works all the time. But I do find trades that I like more than others because they've shown to me over my career that those are the better ones. I'll let you pick your own. I know the ones I like. In the 30-year bonds, I don't know what to do with this chart other than you do recall we had an out. See, this one worked where I can go back. The other one did. You have an outside day down. You take out that day's high. I'm looking now for the closest what? Moving average above the market. I don't have one. Or the Bollinger Band. Did you get high enough? That's the question. Okay, I don't know. You're pretty close. You've made a run towards it. You're flattening out right now. Do you want to go through and wait and see if it finishes that up in front of the jobs data? Not me. So I wouldn't be surprised if pros just said, you're close enough. I think I'm stepping away for a little bit. 10-year note, the trend is up. You're fighting your battle right at the 18-day average. You found the support here. You know, you would think with all the good economic data we've had that futures would be dropping, not going up. When they go up, it means yields are falling. When they drop, what are you doing? It's the opposite. This is very interesting. Higher this market goes, traders are scratching their head. What is going on? Dollar index. I thought when you lost the embedded reading way back here that the odds favored you'd go to the closest moving average. You know what turned out? That was the day to come out of the market. And looking back at it, normally you hit it, but that was called greediness. And you don't want to get over that high, and it's exactly what the market did. Okay. Eurocurrency, no trend, trying to develop a bearish embedded reading. Why is this market getting hit and the dollar's up? What if I use the word Delta version of COVID-19? Good possibility. What if I say this market's looking to see if it's got good jobs data with growth, the Fed might move earlier to taper, putting pressure on the euro. There's all kinds of variants at work here now. The British pound in a downtrend, but very oversold, does not have to reach down to the lower band. When you're oversold, you're oversold. You don't have to go to another number necessarily. Bitcoin. Wasn't this weekend the market that, if I go back with you to Friday, this was it. Go to your headlines over the weekend. Crack $30,000, we're going to 20. Well, the first thing is you already held the Bollinger Band. So that to me is always a bad sign. What do I teach in my enhanced Bollinger Band course? If you hit the lower Bollinger Band, you take out all of your position. You're gone if you were short. It's that simple. Market starts up, don't know what it's doing, and bingo. They capture those people. And, you know, you got to be a chartist to understand this. You're in a neutral area in this market right now. Neither bullish nor bearish. You're under the 18-day average, and you're fighting at it with the swing line pointing higher. Now I had to move to the September Brent, and I might as well bring in the September WTI crude. So the differential, you're seeing it for the first time here, $1.87. This is brand new. Here's the Brent. So you have a pattern of a higher high, lower low, and a lost embedded reading. So while it's rallying, there's a problem. And the other problem is we might hear tomorrow from OPEC what their new game plan is for the months August, maybe through year end. I don't see why they'd give us a 6-month plan when they can do a 2-month and judge how the marketplace is doing. That's what I think they're going to do. But are they going to put more oil out there? They are totally in control of this game, and I think we have to wait and see what they say. They had yesterday, as I said, a technical meeting, but I believe tomorrow is when they meet. So I'd be very careful of this. Same in the Rs. You have a higher high and lower low, lost the embedded reading. Time to be out of those type of trades, in my humble opinion. In the gasoline, and I'm not humble, you've got higher high, back to the 18-day average, playing around in an overbought condition. Bye-bye. If you're going to get that July 4th rally, should have had it. That's one of the ways to look at it. So you put this all together, you're trying to come up with a game plan for yourself, and that's where I come in and try to give you what I think works the best. And I do it in 2 ways. At 5:40 in the morning, I do a futures video for my subscribers, and that's for my paid subscribers. I'm covering 20 minutes of first the news, and that's why I wanted you to see that news. I start off like that, tell you what I'm seeing, and if reports have come out, I'm already bringing the news in from them. I also cover the reports and the data that's coming out of Europe, Asia, and so on. So I really give an awful lot early. The next thing I do is I go into what I think the chart action is. And unlike these free videos where I am not allowed by law to say I think you should buy here, this is what I think you should do, I'm saying this is what I want you to do. I am not anything but straight out. Buy at the market. Do this. Go and put your price order in. It's roughly 40 charts, even though that says 34 on both. All the spiders that are based on, for example, stock indices, you know they're going to be relying on the futures contracts. So you start off at 5:40 with me, and the combo at 8:40, I'm making another recording for the rest of the day to go through what you do in the spiders and ETFs. By then, I've had probably 90% of all reports, sometimes even wait to 9 o'clock. I finish the report. I want to get all that last 9 o'clock reports in, and then I start publishing for you. I think you'll find that if you want to start a day out, have a game plan, work with somebody that's been around this for 50 years, a chartist who I think is serious, that's me, it might offer you the ideas from what I'm seeing for your own game plans. That's the idea. I used to count and take so many newsletters. I'd call on a phone. Do you remember those old days? What is he saying for tomorrow? Because I really respected this trader. Well, if you respect me, why not try this? But with modern technology, it's all different, and you get to see the chart. Go to our website. It explains it all. You can see how it all works. Under the word research, it's right there for you. You can call my staff. They'll work with you as well. I'm Ira. See you tomorrow. Take care.